following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Yeah, looking good, Billy Ray. Feeling good, Lewis. Well, Skype is out, which is a rather monumental thing happening. I remember on August the 15th of 2007, Skype was out. I had just started doing this for TFNN, and I was on the phone with Tom from Las Vegas, and I said, it was a new company at that time, and we weren't certainly surprised about it. But at that time, the Dow was down, I believe, 350 points, but the Russell 2000 was actually up on the day, and the NASDAQ was only down a small amount. The S&P was down about the equivalent of what the Dow was, down about 25 handles, as I recall. And by the end of the day, they had all turned positive, and that was the major bottom before we went into the October high. And then when we took that out, it was a big move to the downside. So that's what we're watching here. And so Skype is out. Anyway, I wanted to talk a little bit about the volatility that we're having now. And this is, I posted in here what the relative volatility is now compared to what it was in 2007 and also in other times that it had. 2007, 2008 was, of course, a record-setting, and I think this will be even more record-setting before we're finally finished. But as you can see here, we're at about 15% of the volatility that we've had so far. We're going to see wilder days, than you could ever believe, and then we'll see what happens from that point. Well, we have some new information, I think, about what's happening in the stock market. Frankly, I haven't seen bearish patterns like this very often in my years of doing trading. This is about as negative as you can see it. In fact, it's so negative, it's a little scary. It smells like it could be a trap, but you got to go what the charts are telling you, and it's certainly telling you that the thing is bearish. Now, the next chart that I'd like to go over with you is a chart of the New York Stock Exchange Composite, and I put that 20-man line in here to let you folks look at it. All the 20-man line is a line that connects previous trend lines. Jim Twentyman, when I first met Jim in 1965, he was my broker at my account at Clayton Brokerage in Los Angeles. A few years later, he moved over across the street to Conti Commodities to work for Roy Fassel. And that's where many of the market wizards came out of that office. There were a whole bunch of them. There was Mike Marcus, Bruce Kovner, Ricky Barnes, Jeff Silverman. Oh, gee, there was a bunch. Gene Nofre, Jay Cross. Boy, there were some really smart dudes in that group. Anyway, you'll notice that after the top was in 1999-2000 market, the market rallied back and touched the 20-man line. In 2000, the market broke badly and touched the 20-man line. And as you can see, what's happened so far, we've had the biggest move down of any of those other two bear markets. In other words, the market that broke so far this year, down 6%, is greater than each one of those in a shorter period of time. Now, if we go back just a little bit farther and take a look at what's happened recently in this, I will pull it up in just 1 second. And you'll be able to see what I'm talking about. There we go. I think this is it. Nope, that's not it. Give me a second. Where is it, Larry? Don't panic. You've got time. These people aren't going anywhere today. You have them in. There it is. This is what I wanted to show you here. This is the S&P 500. The New York Stock Exchange Index was a tad weaker, but we did make that same line on the S&P 500 right at the 61% retracement back on the 17th, and then we've broken down. And then last night, we started to rally. This rally started when the German DAX hit the exact 618 retracement. It made a perfect Gartley and rallied 200 points. That's $5,000 in real money, and that's when it hit the number. I happened to be awake when that event occurred, and if you'll give me a second, I'll put in here and show you, what it looked like as it was preparing to happen, and then we will go on. What I'm doing, folks, is I put up about 30 different charts to show you because of the fact that I'm not able to post charts in from Ensign. I don't know, what the problem is, but and now I'm trying to search for them, and I've marked them down. The $64 question is that I don't get to here it is. Oh, it's right here in front of me here. There we go. And then we'll be able to see. This is the DAX, and you'll see that the little red mark over there where it says 97.80, that was the exact low that we had in the DAX so far today. The high has been up around 99 and change. We hit that number and, rallied, a very strong amount. That's when our rally started here in the United States, is when that was going on. I'll show you the pattern from the bottom. You'll be able to see it clearly. This is the actual bottom down there is down at that 97.80 level. The low on the DAX was 97.89, I believe, and then we've rallied all the way up to above we went up to the 786 level at 99.63 was the high. So we rallied up 100 points, came down to the 61% retracement, and rallied up and made an ABCD. And, as Gartley said, in a bear market, you should sell ABCD patterns. Well, whether that was a sale or not, it remains to be seen. All I can tell you is by looking at these charts overnight, I was literally shocked at how bearish some of them looked. I mean, it was really ominous. Now, most of the people that are investing in stocks, probably 90% of them, know very little or really care less about technical analysis. That's, primarily the bottom line of what we're looking at. But one of the things that, a gentleman who's been around for about the same amount of time that I has, who's far more famous than I, is John Murphy. And he posts on his thing that we have in this rising wedge pattern looks very bad. We got a call from Texas. We got a call from a gentleman named Don. Are you there, Don?
I'm here, Larry. Thank you for taking the call.
Pleasure. What can I do for you?
Two things. First, the most important thing is I got an email from John Logan this morning. Had a near miss with a ruptured appendix Friday night, so he could use some prayers and some white light sent his way.
Good. We'll do that. I had the same thing happen to me when I was 16. I had a perforated appendix, and I almost died. I got a hole in my gut the size of a golf ball.
Oh, Lord.
Yeah, it's tough. Yeah, that's when they had very few antibiotics. But anyway, we'll certainly be praying for him. But they got a lot of good stuff out there now, so he should be okay.
Yeah. My chart question here is you just had a chart of the SPX up with the 20-man line.
Yes.
My question is you had had a hit point somewhere like it was October of 2014 at that low point.
Yes.
Well, my question is, why would you choose that point instead of moving up the ladder to just the touch points in 2015?
Well, you could do either one of those, but the reason why I used, and this is my choice, it had nothing to do with Jim or anything, I used that October low because that was such a major cycle low. And as you know, we've broken that in the New York Stock Exchange Index by quite a bit. And so I took that as a cycle low. What I was trying to do, I've had so many inquiries about the 20-man line. I think I've had 10 or 12 in the last couple of days that I'm going to have to do a little special video. And I'm going to ask 20-man to dictate the darn thing, and then I'll put the charts in, and he'll be able to see it. He's never published it or anything. It was basically what it was done. He would mark like the low on October 14th. And remember, this was it was about 5 or 6 years later that he really started studying Gann quite a bit. And he was into those 45-degree angles. And so he would watch the 45-degree angle. And Jim, back then we didn't have charting services, so we had our own computer that built our own charts, and so we could do our own charts. And his charts had those Gann lines built in them, and he always had the 45-degree line as a really dark line. Well, after a while, he started noticing that even after that time had passed, prices would go back to that 45-degree line, and then react violently for it. And after a while, he started saying they were points on the trend lines, and so he called it the 20-man line. And believe me, I haven't looked at 20-man lines in several years, but in the last few months, Jim has brought to my attention that we've seen more of those in the last few months than we have in many, many years. I don't know if that's an increase in volatility coming or just the nature of the market, but that's why I put it in there. I probably shouldn't have put it in there because it's not really a valid pattern. It's just a place where a trend line happens to touch. But if it touches right at a Fibonacci number like a 618 or a 786, you have to give it even more importance because it does act, like a major resistance. I'll show you some charts later on in the program this week of how it worked, but that's what I'm basically looking at.
Okay, well that makes a lot of sense. If we get above that 20-man line, then, and we settle there, and it looks like it's confirmed above it, then you would go up to the next touch points in a line, I guess.
Yes, I don't search for 20-man lines. I really don't. If one of them pops out, then I'll take a look at it. But I'm not there searching for it because you hardly ever see them. But you see the patterns that we like. The Gartleys and the butterflies and the ABCDs. We see those all the time. So that's what I'm trying to do when I'm following these things is to see what the market's doing. The 20-man line is far down the line of anything because it's not really a pattern. It's just a line that matches up with patterns. Okay.
Thank you very much.
Thank you for calling in, and believe me, it's been a source of mass confusion the last few days because I've had some really interesting emails from folks, and I'll try to explain it the best I can. I spent a good hour this weekend just talking to Jim about it, and he was laughing because he said, well, we haven't seen many of them. I said, well, we're seeing them now, so people are interested. So we'll see what happens with it.
Okay. I'll look forward to more then.
Hey, thanks for calling in, Don. I appreciate it.
You're welcome. Bye-bye.
Okay. All right. Now, the chart that I've posted into Tiger TV today is a chart from John Murphy. John is the Dean of Technical Analyst. He wrote the first book on the technical analysis of the commodity markets back in, I think it was 88 or 89. I'm not sure when it was, but it's a wonderful book, and he's had several other books that are good. But he also has seen that we have some really bearish patterns, lined up here in the market. That doesn't mean they can't turn around and become bullish, but they certainly have a bearish tone to them, especially this one that he's posted here as the rising wedge pattern, because if you notice the volume characteristics of this are, the bottom was made on the 24th with very, very high volume, and then the second highest volume occurred on the high when the market reversed back on September 17th, which was the Mercury going retrograde. Now we have the autumn equinox coming in 2 days. That's on the 23rd, and that'll be a really interesting day because it will have a pretty good time to take a look. We'll take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have a caller from New Zealand. Am I correct?
That's correct.
Good morning. How are you? I hope the connection is okay because Skype is having some problems. What can I help you with?
All right. That's all right. I wanted... hi, Larry. I met with you when you were last in Auckland. My name is Sunil Malhotra.
I remember when I saw your name, I thought that must be you. Nice to talk to you.
Well, great to talk to you. I was looking to take a short position on the DAX, it's pullback. I was wondering where you see an opportunity.
Well, we this morning, as I mentioned earlier in the show, we made a perfect 61% retracement of the low back on September the 2nd, and that put us at 97.80, and we rallied 200 pips so far today. That was up around that 99.80 level, so that would have been the ideal place to take a look at it. I know it's sold off a little bit since that time, but you might want to look at that level for a potential spot to go short. But remember, these markets are very volatile, so you have to risk about 40 pips in the DAX these days.
Yes.
Used to be able to risk 20 or 25, but the stops have to be, I think, a minimum of 40 now, given the fact that we have such larger volatility coming into our trading world.
That's correct. Well, thank you so much, Larry.
Thank you, and I hope to get down there and see you again. Sarah and I had a really wonderful time there. It was really fabulous. We certainly enjoyed it. Thank you for calling in, too.
Yeah, thank you. Let me know when you come next, and we'll host you.
I certainly will.
Thank you.
Okay, that was a call from New Zealand. Back when they had the big earthquake in Christchurch, we had a group of webinars for people. The person that put it together, I believe it was someone down in Christchurch that is, I knew it was. It was Nick McDonald. And Larry Williams, myself, Larry McMillan, there were a whole bunch of people that donated their time and webinars and stuff. And so I did a 1.5-hour webinar. And much to my really great pleasure, we raised $62,500 for the folks in that hour and a half down in Christchurch. So that was really a lot of fun. We made some wonderful friends down there that invited us down last year, and so we did have a good time meeting some of those folks. But boy, that earthquake was still showing a lot of damage, and that was many years. I think 3 or 4 years after the fact. So these earthquakes are bad, folks. But when you look at what a tornado does, holy cow! A tornado doesn't leave anything standing. It's really, really bad. Okay, anyway, let's get back to the markets here. We want to start, overall, I've tried to talk to you about the fact that the markets look extremely bearish from many, many technical aspects, and there's really not much else you can say about it other than the fact that they are very, very bearish, and it'll have to be, something down the road here that's going to be to change anything. Now, we were talking about the 20-man line a little bit a while ago, and I wanted to put the chart of the Dow Jones Transportation up, and you'll also see that, we've had 2 ABCD corrections since, we've had more than that, because this topped way back in December. We had 1, 2, 3. This is the 4th one, and this one also shows that we have that 20-man line. And basically, if you would draw a 45-degree line from the low that we made on July 6th and connect it through, that's where the line comes popping up around that 82.63 level, which happened to be the 38% retracement of the move that we had way back in December. So that's also telling us that, we look like we're heading down. Now, if these markets reverse, like I said, they possibly could, then you're looking at, maybe a major bull market is coming. But right now, the overall scenario of looking at these charts, it's extremely bearish from a technical point of view. In fact, one of the things that I was thinking about this weekend, they look so bearish that it's absolutely scary. Now, I'm never afraid of these tops or bottoms, because most of the tops or bottoms are made with butterfly patterns or the 1, 2, 3 drive to a bottom pattern. So those never scare me because you have a way to protect yourself when you're doing some of these. But when the market's in a free fall like it is now, it's really it's a little more difficult. Remember, because markets drop from their own weight. And the one thing you want to look at here is that if you get really bullish news in the market and the market doesn't react well to it, that's another reason to tell you that, we're heading, to the downside. But we did bottom on the 24th of August, and we went out until the 17th of September, 3 weeks, and we made some pretty significant retracements, and we'll see what happens. We've got to take a break here. 877-927-6. Whoop, that doesn't even. Yeah, 877.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And I posted a chart into Tiger TV from Elliott Wave, folks, Robert Prechter. And it is a chart of the tulip bulb mania back in the 17th century. And as you can see here, you know, it has some chart characteristics, but, you know, I don't know if this is a mania that we have going on right now in stocks. I believe it's a mania that we have going on with the Federal Reserve. Because of the way that the market has, they have added, assets by doing these bonds. It's the same type of a chart that we're looking at here, and I don't know, the characteristics of it. I'm just looking at stock charts telling you that they look extremely bearish, folks. I'm bringing these other things in just to show you that this could be the reasoning, behind some of these things. To have a 400% increase in the balance sheet of the Fed over the past 6 years is really an amazing feat, and it has certainly helped stock programs, of course. And but the problem is when the thing is finally over, how is it going to end? we'll have to let the things, fall as they may, and we'll see what's going to come out. Now, we've got a position coming up for everyone to take a look at because it's going to be related to commodities, I believe, and that is in the Canadian dollar. And what I'm going to do here is I'm going to post a weekly chart of the Canadian dollar to show you where we are. Right now we're trading up at the 132.20, 132.50 area, but about 200 pips higher, we're running into a whole bunch of numbers. We're running into a 1.27 on the weekly. We're looking at a 1.618 on the weekly. And we're also looking at a major ABCD pattern on the weeklies and monthly charts that all comes into this 134 to 135 level in the Canadian dollar. So we need to watch that very, very closely because that could possibly be, a bottoming process in the commodity markets. Now, the grains have, come down and, still near their lows, but, we really don't know what that final thing is going to be, but we'll have to watch it, relatively closely. But this is one that really is something that you want to watch because if you catch it right, it can yield a huge amount of money in a short period of time. And if you're wrong, you're only going to lose a little bit because if it gets above the 136 level, this pattern is certainly bogus. And, the Canadian could go probably to 50 cents to the dollar. I don't know. All I know is if it gets above 136, this pattern would certainly be wrong. So that's neither here nor there. I had a question about the overall markets abroad. The Chinese market, we don't really know what's happening there because half the stocks are still not traded. But the Hang Seng market is still in a downtrend. It was down a little bit last night. The Nikkei was also down a little bit last night. Both of those have seemed to be at major tops, and they're starting to roll over. But the U.S. stock market is the one that, if we get sick, the rest of the world gets pneumonia if we happen to catch a cold. So, we're trying to hold this together. And with Janet Yellen speaking afterwards, the fact that she was worried about, foreign markets, I don't believe that's in their Fed charter to worry about foreign markets. It probably is there in a line somewhere, but, basically they're there to make our money supply and our interest rate structure safe, and it's a private bank working for the government, so they can do pretty much what they want to do because they don't have to report to anyone, and that's another, ambiguous thing to wonder what's really happening. And then you have Jim Bullard on today, the St. Louis Fed president, and he was bad-mouthing Jim Cramer, for Cramer saying that the Fed shouldn't lower interest rates to keep stocks higher. Well, Cramer is a TV personality. He's very entertaining. He's incredibly smart. I'll tell you how smart he is. He's half as smart as his wife. I think her name is Meredith. They're divorced now, but she's a trader for a hedge fund, and she's a real whiz. Boy, let me tell you, that girl is really smart. He's pretty smart too, but I think she's smarter than he is. She must have been. She divorced him. I bet I shouldn't have said that. Okay, let's go on to the next one. Anyway, he's a TV personality. He can say whatever he wants, and that's his opinion. Everybody has opinions, and they usually smell just like an armpit. So you got to remember, and that's including me and Tom and everybody. Steve Rhodes, well, with the exception of Basil, he's not wrong very often. So we'll leave him out of that. But the rest of the time, it looks that's what's going to go down the hill. If I'm not in rare form, I'm just working out of Philadelphia this next 2 weeks because we're with the grandkids. And yesterday, my little 4-year-old grandson was showing me how to use my wife's Galaxy 6 using the apps. I mean, I was totally embarrassed. I mean, he was so good at it that I just, at 4 years old, I couldn't believe what I was seeing. Okay, here's something for us to keep our eyes on from our good friend Rich Anderson from Anderson Capital Management, and that is the cattle market. Take a look at this, folks. If you like technical analysis, this is going to be an interesting one to watch because we have cattle coming into this wheelhouse here between 136. It closed at 136, and I believe the low end of this range is around 134.60. But if you look at the time down in the AB leg from June to July, that drop took 28 trading days. And if you look at the drop between August and September, the 28th day is today. So if you like time and price, this is the one you want to take a look at. Just keep an eye on this because it could be an interesting trade. And it could easily have a 4 or 5 cent rally like we did. Well, we had a 6 cent rally back into August, and we also had a 6 cent rally into September. So a 6 cent rally there would take you back to 140. So the risk reward on this is extremely good. But this is a what we would call a perfect technical picture of cattle, because the techno picture is just set up just absolutely spot on, and whether it's going to turn here or not, one has to wait and see, but this is the time and price of where things should come together for a potential buy in the cattle market. If you remember the soybeans that we looked at back in May, right around the Memorial Day, it's the same type of pattern that we had in soybeans when they were trading down around the 803. I think it was around somewhere around 803, I believe. I lose track of these numbers, but it's the same type of pattern. That's all it is. It just happens to be. And live cattle trade very freely. They trade thousands of contracts a day, so they are tradable. And the swaps are, certainly within realm of a normal risk opportunity of $400 to $800 on a risk in the cattle market. So it's a little not quite the financial market, but that's what we're looking at, and we'll see what's going to happen. We having a little bit of a bounce here in the grains. Wheat held that 618 retracement down at the 484 level, and is now rallied about 10 cents up into the 492 level. So we'll see what's going to happen, with that as we go through. I've had a couple of questions. Of course, most of my questions over the weekend were about the 20-min line, but I also had some questions about the Mercury retrograde. That happens 4 times a year. We go from direct station to retrograde station. Norm Winsky did a really good job of pointing that out, and see if how often that happens. And we went back and looked at that, but usually what you need is the Mercury changing stations along with some other planetary things like a solar eclipse or a new moon or full moon, something like that, or even the Venus Uranus. And we have a real interesting pattern here on on Wednesday, the 23rd. I believe we have a Venus trine Jupiter, which is usually a bullish sign. So that's another reason why we might get a rally into Tuesday here in the market. In other words, rally up into Monday, Tuesday, and early Wednesday, and then roll over. But if that is in fact the case, then as long as the stock market, the S&P 500, doesn't get above the 2,000 level, it certainly looks like it has, a downward bias. That's the way it looks from our perspective here. Now we're going to take a look here at the gold market because we've had hit some pretty good resistance here on Friday that we talked about up around that 1140 level. The same thing was true in silver up around the 1543 level, and we're backing off a little bit today. We haven't even taken out the lows of Friday as of yet, but we're close, and we want to see how the market acts, because if we can get it to close above that 1145 level, that sets up a potential for a $70 rally off of the bottom. And that $70 rally off of the bottom at that 1092 level would take you up to 1176, and then your ABCD on that move takes you to 1190. So you're $53 away that we could easily get to in gold if we take out these highs. So right now, I believe we're still in a minor uptrend because of the Gartley pattern that we had last week back on the full moon, the new moon and the solar eclipse. And I still think we're into that. We had a 6-day run in that. We were backing off a little bit. I'd like to see a little pullback into around 1120, and then I think you've got a chance for gold to rally even more. But any move below the 1090 area now would really set up a negative scenario on the downside. So right now is still bullish, but that's what we're looking at from the short period. So we'll take a look at it here. We're having a pretty good rally here in the markets here. If you give me 1 second here, I have a beeper going off in something that I wanted to check, and that happens to be 1 second here. I've got to turn it off because we've gotten to the point where I thought it was going to be, and that is the banking index. The banking index is the one that looks the worst, folks, of any of the chart patterns that are out here. It is so bearish that it's literally scary. That it really is, because if you look at this, of course, we stopped right near the 786 on Friday. Maybe that was a cycle low. If it was, that would really be a major turnaround. But if you take a look at this banking index, after we bottomed on the 24th of August, we rallied up and we took out that high on the 17th, which was Thursday, into that Mercury retrograde. And then look what happened. We had those two monster down days, and now, we stopped so far this morning, but we're still looking at a spot where we could be getting ready to go lower. That's what it looks like from this. Really a bearish chart. The only way that this would change is if this thing reversed and went back over the last 2 days' highs up around that 73 level. That would mean it would have to get a 5% move in the next couple of days, which is certainly possible because we do have a potential for a bounce into this area, but it's still relatively early to see if that's going to be the case. But of all the charts that we looked at, that I looked at over the weekend, the banking index was by far the worst. Remember, that was one of them that led us up. The IBB chart was bearish, but didn't look anywhere near like this. It was still, had some type of a chance for a little bit more rally. But boy, the banking index really looks bad. And if you looked at the banking stocks, went across the board and looked at the big ones, Goldman Sachs, J.P. Morgan, Wells Fargo, Morgan Stanley, they're all, really negative formations. And whether that's going to be the same, through the rest of this, we have to remain to be seen if this is going to be the case or not. It's still really early. But this week will be important because if we don't close down sharply this week, that means a chance that this bottom is in, and there could be more to the upside. It certainly doesn't look like it from a technical basis, but it certainly makes it pretty bearish. If we just looked at the New York Stock Exchange Index, which is also very, very bearish, and it's going to be up just a little bit today, probably challenging the highs that we had on Friday. Now, if this market makes a higher high than we made on Friday and then turns lower, that would even be even more bearish because you would have an outside day down. In other words, the market attempts to rally and fail. But we had a shooting star candle on the 17th when we did that reversal. Then we gapped down on Friday, and so it's fighting for its life in here from the bullish side. And that's all you can say about it. But boy, the patterns overall, they do look rather bearish. That's the bottom line of what we're watching here. We want to send some white light out to John Logan. He's had an emergency appendectomy, and I certainly hope that he gets well with that. I know what that's like because I went through it. Going to take a little break here. So 877-927-6648. Oh, we got a caller on the line first. Mike from Toronto. Mike, are you there? Uh-oh. Maybe I lost him. Mike, are you there? He probably got angry with me for not answering the phone right away, but maybe he'll call back. I happen to know Mike, and I think he will. Anyway, we're going to take a little break here, I believe, right now, aren't we? We should be in the break mode. Yes, I'm right. Okay.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back. And I posted the chart of the IBB, and as you can see, that's the least bearish of all the charts. It had the shooting star pattern back on the 17th, but it could barely take out the lows of that day, so it's held. It's still above the 61% retracement, so that one is still the most bullish of any of the charts, but the rest of them are certainly bad. Mike, are you there?
Hi.
How are you?
Yeah. Do you see a cliff dive set up there on the IBB?
A what?
A cliff dive. You have an ascending
I don't know what
wedge.
that is, Mike.
It's an ascending wedge, and it's ready to fall apart.
Well, I think it's ready to fall apart, but I don't see the wedge there on that one. I mean, I see it in so many other ones, but I haven't looked at it that closely. And I posted into Tiger TV. The main thing is the fact that it hasn't broken that 61% retracement with any gusto as of yet. So it's the last group that is still holding up. The rest of them have, really really gotten hit pretty hard. But the overall bearishness of the market from a technical standpoint, to me, is very bad. And I'm in a really hard spot here because I don't want to get you folks, lopsided on this if I'm wrong, and I'm wrong a lot. But looking at these charts, boy, they're scary. I mean, in fact, they're so scary, I wonder if it's a trap, because if it is, it's a great one. And we'll know this week, because if we're stronger this week than we were last week, then this bearishness is probably not near as bad as I think it is.
Okay.
Does that help you?
Yeah, it's helpful. I'm just curious. There's a bunch of conferences in California coming up on the biotechs. Do you think that will have a major impact on it?
Oh, I'm sure they will be. And they're not going to be bearish ones. You know that the bearish ones are going to leave in the closet.
Mm-hmm.
So, you're going to get some moves. But remember, this is a really specialized index that moves around a great deal, because some of these stocks are so very, very expensive. It doesn't take much of a pop, to make a move. But the overall market is what I'm looking at, and that just looks horrible.
Okay.
At least from my perspective.
Thank you.
Hey, thanks for calling in, Mike. Good talking to you again. Okay, folks, that's it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.